buy-to-let has been around forever, but does it still work today? The first thing we need to look at is analysing the market in the first place. So we've been invested in property since the Doomsday Book in 1086, where you could buy the whole of the land in the UK for about £70,000. Fast forward to now, with the average price of a property listed way over 300,000, but the average purchase price about £290,000 right now. But interest rates have gone up, inflation is crazy, and the rental demand is going insane in the UK. So why is it such a good idea in the first place? The first thing I think is super important is, who are you actually listening to? So the problem that we have when we're analyzing data is you listen to who's in your face the most. So if you're watching this video, let's kind of hope I know what I'm talking about, right? But if not, you're looking at the news outlets. Let me give an example of an article that came out in November that said the property market might fall by up to 40% in the next 12 months. And by the way, that was commissioned by a bank that had put together a collective of 100 billion to invest in UK real estate. So I always look at the big players. What are they doing? If all of the banks, and think about, you've seen Aviva putting together £500 million, Lloyds Bank that have bought pretty much every letting agent in the north right now, all of them are making big moves in property whilst telling the average person that now may not be the right time. So instead of listening to what those people are saying, what are they doing? The other information that I like to look at is government insight. So ONS, the Office of National Statistics, which is actually based on raw data. So I'm looking at interest rates. I'm looking at how many mortgages have been put out in the last month. I'm looking at inflation and the impacts of that. Within that, one thing is understanding that the statistics are there. How to actually utilize them is just as important. For example, on average in 2023, it's predicted that the housing market is going to go down 8%. That's awful, right? Why on earth would you buy? Well, actually, that is indicative of the sentiment of the market. What the fuck does that mean? Well, what it means is, if that is published, most people's insights are, that's bad. That's bad. If it's going down, get out, right? Well, no. Be greedy whilst others are fearful, and fearful whilst others are greedy. That's Warren Buffett. I'll give that one to him. All right. So the point is, what happens when the predictions like that come out? Yes, there's a dip in fluctuations, which, by the way, happened in around November 2022. What's happened since then? The market's gone up. And when it end the year, I think I predicted in a video between 3 and 8%. So we'll see if we're right at the end of 2023. But what it actually does is opens up certain areas. So I'll give an example where we invest, which is mainly West and South Yorkshire. If you look at the South Banks area of Leeds, which has the largest, that was a lie, second largest residential development in Europe ever right now, you couldn't buy anything, and I mean anything, for less than 10 grand above market value, because there was so much demand. But thanks to all of this shit going on in the media, it's allowed us to pick up amazing deals on behalf of us and our investors. The other thing that I'm looking at is average house sales increase. So this isn't actually how much it's completed for, it's what are the listings going up. And in April 2023, they went up 0.2%. Now that might seem like a very small change, but actually it's an indication of the medium-term predictions from estate agents, and they are on the front line. So if it goes up slightly, that is showing that actually they are noticing an increased demand in their area, and that's gone up to about 382,000 over the last month, which is a pretty crazy figure when you think about it. The final thing I want to think about is getting specific with data. So it's very easy to go, as an average, this is happening. The average property is listed at this. The average property is completed. This is what we're predicting on the outcome of the market. But think about this. Do you think a central London property that's listed for 20 million might get affected slightly differently than your boring vanilla buy-to-let in Yorkshire? Well, yes, obviously. And I like to think of this as a tree analogy, well known for my art on this channel, by the way. So if you think of this, These are all leaves, as you can tell, right? So what happens when the wind blows? So it gets angry, it's the storm outside. Well, does the tree suddenly uplift and go? Well, yeah, if it's a shit tree, right? But this bastard's been going for 200 years. Is it going to be going? No, because there's roots under here. More art for you there. So what happens is the trunk of the tree, all of this is absolutely fine. And then the branches that are at the core here are absolutely fine. It's the leaves on the outside that fall away. So how does that relate in property? Well, you've got the top price properties. And the way you look at this, by the way, to analyze your area is if you've got the average price of a property, and if you just think this is the average price. So in my area, that for buy-to-let territory, that's going to be about 120k. That's the average. And what you need to understand is long-term prices move towards the average. And then when we're in a recession or hard times, we move faster towards the average. So what that means is £400,000 properties will start to come down more aggressively. These prices will still come down, but it will be very flat line. And actually what you might find at these prices is they actually go up. But if these prices come down 5% and these go up 5%, the overall market has come down 4 point whatever percent. You think, how the fuck does that make sense? 5 and 5, it's the same, right? Well, no, because if this goes up 5%, we've got an increase of £4,000. If this comes down 5%, the leaves at the top of the tree, we've lost £20,000. So on average, there's a £16,000 gap. The other things to be thinking about is the areas by the seasides, the countryside and things like that. Second home territory. But the core, the average, the 120, 140 grand in my area, boring, vanilla, buy-to-lets consistently go up through this territory. The next thing is understanding why you are investing in property in the first place. So this baffles me. It's how long are you looking to own the property for? I don't know. Let's say my exit is death, which it is. I am looking to own things forever, hand it to my kids until their kids fuck it all up and then the next generation have to start again, right? So if that's the case, then why would I make decisions based on today, the next month, the next 2 months, the next 3 months? Remember, if in doubt, zoom out. If you look at the average 5-year growth predictions, which by the way, 5-year growth predictions are done by some of the best economists in the country. They know far more than you or me. I promise you, you cannot find an area in the UK 2023 to 2028 that is going negative. In fact, almost every area that I looked at, Manchester, Leeds, Nottingham, Birmingham, Bristol, London, Brighton, the Northeast, every single one that I looked at as a genuine place to look to invest was over 14% growth. Now, is that a guarantee? No, but as you're going to find out, 80% of your money is going to be made here. I'll cover that in about 4 minutes. Linked in with understanding why you're investing in the first place, I like thinking about rental. So a lot of what I'm doing is boring, vanilla, buy-to-let properties, right? So when I'm looking at a property, I'm really looking at 3 angles, but I'll narrow it down to 2, which is going to be the rental and the growth of the property. So a lot of people, when they're making purchasing decisions, they look at short-term growth, like, oh my God, the market's gone down 5%. That is a good thing, by the way. Attack when other people are defending and all of that, right? But the other thing is rental. So if you think about this logically, everything in economics, it comes down to supply and demand. How many are available? How many people want to buy? Prices will go up when demand is higher than supply, and prices will come down once demand starts dropping. Hopefully that makes sense in the most basic terms. But property is a sort of 2-pronged attack. Think about this logically. If prices are going down, and the reason for that is that people are selling their properties, what is happening for the people that are needing to sell their properties? Are they suddenly going on the street? No, very unlikely. More than likely, they are going from a homeowner to a renter. And so when demand for purchases go down, you have a two-pronged attack in that your prices that you can get the asset for are going down, but at the same time, the demand for rents are going up, and so the prices go up. And so all the time, when one is impacted in the short term, i.e. the growth, the other is impacted positively. And the great thing about the rental demand is, hardly ever in the last 500 years has it been tracked to ever go back down in a significant way. So I mentioned 4 minutes ago exactly, I'm sure, that I would go through why 80% of your wealth is in property. So if we look at this as a property investment, my beautiful, happy little house here, and I bought it for £100,000. Why is it capital growth over the long term is actually the biggest impact? And therefore, why do I still invest in property? Why do I still find properties for my clients? Well, it's this. So yes, you've got your cash flow. All right, let's say your net cash flow is £3,000 a year. For those that are new to property, cash flow is the net, and net is after all costs, return that you're getting in your bank on an annual basis. So £250 a month, or 200 and something a month, let's call it £3,000 a year. All right, you think that's the main way, right? No. Actually, it's capital growth because we have something called leverage in property. So when you're buying a property for 100,000, you're not actually putting in 100,000. You're putting in roughly a 25% deposit for a boring vanilla buy-to-let property. So you're going to put in 25k for a deposit. And just for the sake of this video, let's say we are all in at another 15k for cost, stamp duty, bit of a refurb, some fees, whatever it is. So we're all in at £40,000. So you might not notice the average long-term capital growth for a well-selected property is 7.9% every single year. But let's keep the numbers simple and be conservative. Let's say you've got 5% capital growth. Well, if you've got 5% capital growth, it's on the purchase price. 5% of 100,000, £5,000. That, you've made £5,000 from your capital growth and your £3,000. And as you can see from that, a majority of your wealth has come from the capital growth. 5,000 over 40,000 is 12.5%. So 12.5% increase in my net wealth just from owning the asset. And that's before you've got Pete in the property. That's Pete, by the way, in there paying me £3,000 on top. Guess what happens the next year? It goes up again. What about the next year? It goes up and up and up again. So as I said, if in doubt, zoom out. And if you're going to invest for retirement, then analyze for retirement. If you're interested in investing in property, by the way, and you're thinking, I've got the money there, but I don't have the experience. I don't want to screw this up. I need somebody's help. Well, that's where we come in. So my main company is Aspire Property Group. And what we do is we help individuals just like you. If you've got 100,000 or more to invest, we help you build the portfolios. We do it hands-free. We take care of finding it, negotiating it, getting it through legals, the refurb, and we manage it in-house. And by the way, if you're interested in that, just put APG in the comments. And what we'll do is we'll put on a free one-to-one strategy session for you to make sure it's right for you. So hopefully this video has been valuable to you. What I'm really interested in is, are you still looking right now? Are you looking to invest in buy-to-let property? And if not, why not? And if you are, what opportunities are you looking for right now? If you're new to the channel and you want to find out more about property investment, make sure to hit the subscribe and the notification bell. We are posting multiple videos every single week to help you increase your knowledge in buy-to-let property investment. And if you did get value, make sure to destroy the like button, and I'll see you in the next video.